welcome to this special show that we are calling the Infy Reset. I'm Chandra Shrikant, coming to you from Infy's headquarters right here in Bengaluru, in front of the iconic pyramid building here, right here at Infosys. Now this quarter wasn't just about the fourth quarter results or the guidance for the next year, but it was also a big change at the board level, where independent director Ravi Venkatesan has been inducted as co-chairman. Now, why is this important? Remember, this change comes after weeks of flashpoints between the board and the original founders of the company, led by N.R. Narayan Murthy. Mr. Murthy in particular was pretty vocal in criticizing some of the decisions of the board with respect to severance pay to the former CFO, pay hike to the current CEO, and also broad slippages as far as governance is concerned. Now, is this an attempt by the current board to buy peace with the founders? Will it pay off? And more importantly, how will they ensure that the presence of a chair and a co-chair doesn't slow down decision making? We put some of these questions to the current chair, R. Seshasayee, as well as the co-chairman Ravi Venkatesan. Let's listen into what they had to say. Thank you so much for talking to ET Now. We're joined by Infosys Chairman R. Seshasayee and the newly elevated co-chair Ravi Venkatesan. Thank you for joining us on ET Now. So I can't think of a more direct way to ask the opening question. What has board change done to placate Mr. Narayan Murthy?
First of all, I must say categorically that Murthy did not propose Ravi as the co-chair. Of course, all of us joined the board when Murthy was the chairman, and we are all known to each other. The reason why the board felt that we need a co-chairman is because I have been spending a great deal of time on a variety of subjects, and the intensity with which the board members have been engaged in the last few months has been very high for a variety of reasons. And so I've been suggesting to the board that it would be appropriate to increase the bandwidth of the leadership of the board in order to be able to spend more time with the management, with more time with the stakeholders. And so the board very appropriately and unanimously chose Ravi should be the co-chair. He has been a phenomenal colleague on the board, and has been contributing significantly to resolving several issues. So that's how Ravi is there as a co-chair. It's not because we have to do anything to please one or the other group, and that is not a correct interpretation.
Right. Ravi, you know, a lot of people I know are attaching a lot of meanings to your own role. People say that perhaps you will play the role of a bridge between the board and the founders. Take us through what role you will be playing going forward as co-chair.
See, Chandra, I see all companies in the industry right now struggling to transform themselves to a new business model, right? And Infy is very much part of that, and Vishal's doing a pretty good job driving that shift. In addition, in Infosys, we've got another major shift happening concurrently, which is that from a promoter-led company to a more professional board and a professional CEO. And so we've got a fairly large set of challenges, and as Sesh said, the metaphor I use repeatedly is if you've got a plane flying through a storm, it's helpful to have a co-pilot in the cockpit. And so I see...
And there's too much of turbulence now.
There is a heck of a lot of turbulence and headwinds and crosswinds out there. And so I see my role as supporting Sesh and the board and working closely with Vishal on a whole set of issues. We've talked a lot amongst ourselves on how we're going to partner. We decided that given that we've been colleagues for so long, that we won't have a watertight division of labor, but rather that on some issues I'll lead, on other issues he'll lead and I'll support. And so there's just a heck of a lot of work to be done.
Right. Sesh, I just want to understand, will this sort of put an end to the flashpoints that we've seen in the last few weeks between the board and the founders? Any assurance, tacit or otherwise, that you've got from them? Because one of the key issues that Mr. Murthy kept pressing was, a change in the board composition, particularly the appointment of a co-chair. So, in a sense, does this signal the end of perhaps a flashpoint, an olive branch that the board has extended to the founders?
You know, in the course of making this transformation, whether it's business or the professional management or the culture, there would be several decisions that the company will take, and there are bound to be different viewpoints, perspectives coming from different quarters. And as I've said repeatedly, we have a responsibility as a board to listen and act responsibly. So therefore, in every situation, including the recent expression of viewpoints on the COO's Praveen's pay hike, you would have noticed that the company said and the board said that we value the feedback. This is probably we didn't do a good communication about what was precisely the manner in which this was done. So we value that feedback.
But is there a stance in, because your statements in both instances, the previous time in January as well as last week, is that we value feedback from all stakeholders, and promoters are also part of that group.
Right.
But are you now sort of giving them some sort of special treatment, preferential treatment? Because this would be seen as a reaction to what they've been saying.
Chandra, I have said this several times. This is an institution which has been created by the genius of this promoter group, and nobody can take away that. In some sense, in a very moral sense, we're all trustees of this wonderful institution that has been created by the founders. But at the same time, we are also an independent board, and we have to act like an independent board. And we therefore have to listen to all stakeholders and act in our judgment to the best interest of all stakeholders.
Right.
So there could be differences of viewpoints. We don't have any issue with differences of viewpoints. We would have to listen to them, and what is appropriate, we'll act on that. But as I said, don't link every action, including the appointment of Ravi as co-chair, as being anything by way of a response or a reaction to some position or statement or comment made by the founders. I don't think it is correct to link every action of the board to something which comes out from the promoters. So that's not the intention of the promoters either. They are giving us feedback, and let's listen to those feedback.
Ravi, what message does your appointment send out to wider set of stakeholders in terms of the steps that Infosys will take going forward? Any specific action points you have in mind?
No, as I said, this is a fairly seamless sort of action. I've been on the board for 6 years, and I think it signals continuity and a need to double down on the agenda that the board has and Vishal have embarked on.
And does this signal more changes going forward? Will we see induction of more independent directors or people in an executive capacity who make the cut for the board?
So we have a slate of names.
Internal and external?
Well, at the moment we have a slate of name external. Okay. We have looked at what are the skills that we need to bring to the table, and so we would be constantly be looking for filling up those gaps and skills that we have in the board, and refreshing the board periodically. That's part of our job.
Right.
So change is a constant now.
Yeah.
So
right. A final set of questions. There is some dissonance on this 2020, revenue target. I remember you were quoted a few months back saying, this is not an aspiration, this is a target. Today, I asked Vishal this question, and he said, it's a moonshot, it's an aspiration. How would you really define this target? And is there a need to sort of, recalibrate the numbers, because it clearly looks very unrealistic at this?
So I think, there are two parts to it. One is that is Vishal saying something about 2020 which is different or contradicting what I'm saying about 2020? I think this question needs to be answered, right? You would have noticed that in this resolution, the shareholder resolution for Vishal's compensation, there was a very definitive kind of a statement to say that the compensation and variable pay was linked to 2020 targets, right? And you would have noticed that in fact the variable pay has been linked to a trajectory that took us to the 2020 target. And you would have noticed that actually, because of the several factors which are completely outside the control of the management relating to industry, the actual achievement has been far short or what the trajectory would have been to take us to 2020 target. And again, it is, must be said to the credit of Vishal that he held himself accountable to take us to the 2020 target, and therefore he was the one who said that I will hold myself linked, my compensation linked to the 2020 target, and he has acted upon that, right? And this is how you would find that his compensation is actually less than what he got last year, because as a wonderful leader, he wanted to lead from the front and say that I wanted to do this. Now, this is the intention of the board. This is what the shareholders have approved. So there's been absolutely no non-alignment of this issue. But 2020 target is not something from a business point of view, something which can be achieved without any kind of a lapse at all, because the dynamics of the marketplace keeps changing. Sure. There are several variables which are outside the control of this. So on the one hand, while this has been, despite all these uncertainties, while this has been baked into the compensation package on the one hand, the other is that this continues to be the guidepost from the point of a business movement.
Right. Final question to you, Ravi. I remember Sesh gave up his role at Hinduja, so that he could focus on Infosys full time. Will you still continue to focus on Bank of Baroda and Infosys? How are you really going to divide it?
Well, my role in both of these institutions is non-executive, and that's another transformation which is only partially complete, and so I very much intend to continue at the bank as well, right, if the government wants.
Finally, is there concern that the presence of a chair and a co-chair could slow down decision making? How will you really ensure that doesn't happen, particularly in a difficult environment like this?
Chandra, I think when you find that there is turbulence, I mean, using the same analogy that Ravi used, you would find that instinctively or intuitively the pilot and the co-pilot would do the same things to make sure that it comes out of a turbulence. Now, they don't debate and argue and say that, I don't think that we should push this throttle, another person saying they will do that. No, because I think, sometimes challenges bring people together amazingly. And I can tell you that I'm very, very proud of the fact that we have an extremely cohesive board of extraordinary leaders who might have different viewpoints, but we converge very quickly on what needs to be done. And I don't think, therefore, that there's been any tough issue, and I don't believe that there will ever be a tough issue.
And we've worked together for 6 years on this board, and 20 years over time, so I think we sort of know each other.
Great. And both of you have a Chennai connection as well, or a Tamil connection.
Yeah. Well,
but on that note,
he speaks awful Tamil.
But on that note, thank you both so much for talking to us.
Thank you, Chandra.
That big board level change aside, time to get you some details of what the quarter looked like for Infosys. Investors were certainly disappointed both with its fourth quarter numbers as well as its guidance for the coming year. Here are some of the basic numbers as far as Infosys is concerned.
Infosys top management, clad in shades of black and blue today, seemed to echo the somber mood of the earnings. Results for the fourth quarter were barely in line, and the coming quarters too look challenging. The only spot of cheer was the $2 billion capital allocation plan, but that too failed to lift the stock, with Infosys and the IT index ending in the red. Sikka even cast doubts over his ambitious 2020 target of $20 billion revenue.
It has always been an aspiration. Praveen and myself and Ranga have always talked about that. Every once in a while, when you begin on a new journey, you want to set up a very compelling, steep aspiration, and this is what it has always been. It was already a difficult thing, and now it is an incredibly difficult thing.
For the fourth quarter ending March, Infosys reported $2.569 billion, up 0.7% quarter-on-quarter versus the ET Now estimate of $2.589 billion. EBIT margins came in at 24.6% FY17, with revenue growth of 8.3% in constant currency, coming in at the lower end of its 8.4 to 8.8%. More importantly, for FY18, Infosys has guided to grow revenues by 6.5 to 8.5% in constant currency and has given an operating margin guidance at 23 to 25% compared to the 24 to 25% margin band for FY17. The board also outlined a capital allocation policy stating that it will give back $2 billion to shareholders either through a buyback or dividend.
If you look at the last 2 years, we have held the margins. In fact, if you look at the peer comparison, probably we have held the margins much more successfully. If I look at financial year 17, the biggest outcome is despite the constant currency growth as compared to earlier year, which was 13.3 to 8.4, almost 5% lower, they've held the margins at the same level.
BPO in the last couple of years has been relatively slow, but in the last 2 quarters it has picked up. In fact, this quarter it has had one of higher growth, about 5% on a constant currency basis. On the consulting thing, we still have a challenge. Our focus this year, therefore, is to focus more on turning around consulting, focusing on making it more profitable, building more stronger foundation.
The other important announcement was in the board, where independent director Ravi Venkatesan has been elevated to co-chairman, in a move largely seen as an attempt to build bridges with its co-founder N.R. Narayan Murthy, who has been sharply critical of the board and the governance in recent weeks. While distractions at the board level are being addressed, the pressure will increase on Sikka to deliver. With a weak demand environment and uncertainty in visa norms in the US, Infosys will need all its strategy and execution heft to coast through and deliver on its guidance. With Rahul Dayama and Chandra R. Srikant in Bengaluru, Shivangi Acharya, ET Now, New Delhi.
I also caught up with Infosys CEO Vishal Sikka to really find out the demand trajectory going forward, if this guidance is a conservative number, and also what happens to the 2020 vision of $20 billion and 30% margins. Is this now more of a moonshot than an actual target? Sikka at least believes that it's certainly going to be very difficult to meet that target. Listen into what he had to say.
65% of our workforce works on 55% of our revenue, and this is the part that is becoming more commoditized, whereas 35% of our workforce works on 45% of our revenue at a much higher RPP and much stronger growth. In that area, we have seen 20% growth, close to 20% growth in the last year, and we expect very strong growth this year as well. So for the new things, for the software platform, for Mana, I mean, in less than 4 quarters, we have reached more than 50 clients of Mana, 150 or so engagements. It has more than doubled every quarter. So there is a very strong sense of optimism that we have in the new areas, and we have to bring automation and an operational focus in a very strong way.
You know, it's a landmark that you've crossed this $10 billion figure for FY17, but the $20 billion figure for 2020 looks a little unrealistic now. So, you know, is this more of a moonshot and not an actual target that you're working towards?
Yeah, you know, Praveen was telling me that many years ago at Infosys, we had a $10 billion aspiration by 2010, and we just crossed 10 billion. So it is something that it has been an aspiration. A moonshot is a great word for it. Obviously, it is an exceedingly difficult target to achieve now, especially with what we have seen in the last few quarters. But the important thing is that the framing of strong growth while improving margins and especially improving revenue per FTE is a great way to frame our endeavor. So, but we cannot mix these things as financial goals. This is clearly we want to get to 20 billion, 30% and $80,000. It will be very difficult to get there by 2020.
What changes do you anticipate in your business model going forward, factoring in the changes in H-1B visas?
More local hiring, more local training, which is a very healthy thing to do regardless, and a more embrace of technology to help better collaboration and more seamless experiences and presence, so that the diverse teams across the globe can work together more efficiently and so on.
The important change at the board level, you know, has happened this time. There's also a capital allocation policy that's been outlined. With these two developments in mind, do you expect the friction to come down to a large extent between the founders and the board?
A tremendous relationship with Sesh and with the entire board. It's a very cohesive board. It's a very committed board to the endeavor at hand, and extremely hardworking. And you know, the last few quarters, and especially the last quarter, has had this additional sort of distractions. But that's what we deal with.
We didn't just catch up with Vishal Sikka, but also the CFO, MD Rangnath, as well as the COO, UB Praveen Rao. We asked Rangnath about the reduced margin band for FY18. Remember, it's 23 to 25% versus 24 to 25% for the previous fiscal. What impact the appreciation of the rupee is going to have, increase in on-site expenditure will have, some details on the capital allocation plan with respect to buyback. And we also asked Praveen about how the various verticals are doing, where the pressure points are really coming from. Listen into what they had to say.
The reason for broadening is that we want to closely watch how the rupee moves, because already the rupee has moved about 3.3%. If you look at from the FY17 average, that is one factor to consider. So the second factor is also that we want to proactively make certain on-site DC investments in the United States to address any potential changes there. So I think the range is broadened.
Praveen, segment-wise, what is working for you now? And I remember a few quarters back, you outlined this vision for, at least $1 billion in TCV every quarter. Is that really possible in the current environment?
See, if you look at it in the last 4 quarters, on an average, we have been doing about $800 million TCV in every quarter. So it is possible. The only thing is the deal sizes are coming down, actually, unlike in the past.
And the pricing is
also... pricing is obviously, pricing is under pressure. Large deals means a lot of pressure on the pricing as well. But it is possible. I mean, if you look at the pipeline and other thing, and if you assume a normal course of deal closures, it is possible to hit $1 billion. So we are not giving up on that. But we are fairly comfortable because we have consistently now, in the last 1 year, we have been around $800 million. It's a function of deal size, it is a function of deal closure and other things. But it is doable. I mean, that's
but BFSI consulting is looking up now.
BFSI is looking up. Consulting, as I said, this year our focus is more on getting the fundamentals right. So we are not focusing too much on the growth. We are focusing more on getting the basic right, getting the profitability back, and getting more consistency in the consulting outcomes.
Those were voices from the top management, but what do the street really make of the Infosys numbers, and what are they factoring in as far as the price is concerned going forward? Sunita Nagpal joins us for an analyst take on the Infosys results.
Well, markets gives a thumbs down to Infosys performance or the guidance that they gave out. If you look at how the stock performed in today's trade, that's how it played out. Looking at the brokerages, what they have to say. If you look at Citi is disappointed by the guided margin range of 23 to 25%. They are saying that the consensus estimate is 25% for FY18. So 23 to 25% is a disappointment. If you look at IDFC, they are saying that the performance has been soft in this quarter, and the guidance factors very slow recovery. So that's also a disappointment from them. If you look at Kotak, Kotak says that this is the second subsequent quarter where they've reported weak earnings, and the not so pleasant news flow continues to be a worrying factor. They expect that the earnings could see a decline of 4 to 6% in FY18. That's the kind of cut they are talking about, and they are saying that the company has to improve or has to give a consistent performance for the stock performance to improve. That's what they are saying. As far as Motilal Oswal is concerned, they're saying the effective payout ratio only improves from 50% to 55%, and IIFL says the bad incremental news is already priced in, so they continue to be positive on the stock.
And with that, then we come to the end of the special show, the Infy Reset. We hope to give you a 360-degree view from the board, the changes there, as well as the demand environment going forward. Now, there is hope that at least with the board distractions out of the way, Vishal Sikka can dedicate 100% of his attention to strategy and execution going forward. Because remember, it's not just a difficult environment for Infosys, but the IT pack as a whole, both on the demand front and also on the policy front because of changes in visa norms in the US. We have to see what the remaining year holds for Infosys. But thanks so much for watching this special show.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.